Friends, how are you? This is Igor Pechkovskyi with Windermere Bellevue Commons, your trusted real estate professional on the Eastside Bellevue market and Seattle metropolitan area. Today we have another market update. Very good stuff I got for you. We're gonna go over a lot of things. We will start in today's video with all the latest numbers. The market had been in a decline. It's official. I told about that in the last month's video, but I'll show you all the numbers. I'll explain to you what those numbers mean. I see that there is a lot of kind of misunderstanding about the market, and there is a bit of misinformation about the market. So I want to bring you all the data of where exactly we are. Then we will talk a little bit about inflation, because the CPI numbers came out like the other day, and we have 9.1% inflation. So we'll talk about what that impact will be for interest rates, and we'll try to make a prediction for the next 6 months. And we're gonna wrap up this video with item steps for buyers and sellers. If you would consider buy or sell in the next 6 months, what can you expect and what's your game plan should be? And that'd be our video. So without any delays, let's get into numbers. Let's go. All right, my friends, without any delays, let's get into the Eastside numbers. And I like to start with inventory. So for years, over the last year and a half, we talked about how short the inventory was. We had ridiculous levels of 0.3, 0.2 of a month, like days of inventory. Now, look, year over year, this is June 21 to June 22. Year over year, inventory went from 0.3 to 2 months of inventory today. Like it was increasing last month, right? Last month we had 1 month of inventory. Now we got 2, which is great news, guys. Like, it's great news because our inventory been so short for so long. Now we get 2 months, but 2 months, remember, is still seller's market. So between 1 and 3 months, it's seller's market. Like 3 to 5, it's balanced market, and 5 months plus, that's buyer's market. But 2 months of inventory is great news. However, it's still seller's market. So let's go next to median price. Median price, 1.5 million. It declined from 1.7 million in the peak, and I'll have those slides a little bit later for you. But right now, 1.5 mil, but it's still 10% up year over year. And I'll come back to that here in a minute. But 1.5 mil for the median. And let's look into the over asking. We still have multiple offers on some of the properties. 39%, obviously a huge decrease from May of 2022. Remember, we're technically July, so these numbers are for the June. So 39%, still average days in market 5 days. So make no mistakes, it's still a seller's market. 5 days on the market with 6% difference from the list price. All right, so that's what we got. And to follow up on this, I want to show you sold to list price graph. Look at this. So 82% of total listings, guys, 82% of total listings, they still sell under 15 days. So the sky hadn't fallen, just like we're having price correction. But this is an indicator. What that number means is good real estate sells, all right? Like, great. Ask any buyer, hey buyer, do you want to buy an okay house or really awesome house? I want to buy a really awesome house. That's what every buyer tells you. And real awesome house sells under 15 days, 82% of them, okay? So the houses that stay on the market longer, 15 to 30 days, you have median sales price to original sales price, a 7%, almost a 7% reduction in price compared to where it was priced. So that's 13% of houses. So the dated houses or houses, they're not really well taken care of. They stay on the market longer, they get a bunch of price reductions, but still 82% of houses sell under 15 days. Friends, for the east side, I told you a bunch right now. Let's summarize. So we had a very sharp incline in prices all the way from December of 2020. Prices went up 55%. Look at this. So they were 1.1 mil in December 2020, and over the last year and a half, They increased 55% to 1.722. That's our peak price for the median for the east side in the months of April of 2022. Very sharp increase. And the interest rate rise from 2.6 in December 2020 to almost 6%, 5.5% in June 2022. So interest rate went up all the way really quick as well, which made the stocks fall, right? The Amazon, Microsoft, Google stocks, as you can see on the slide, they declined by 30% on average. A lot of people out here that buy homes, their down payments are in stocks. So when stocks are down, you don't really want to sell them, right? Because you can hold on to them and maybe they will go up again. Probably they will go up again. But selling them doesn't sound that attractive when they're down. So the down payments aren't there. Now it's more expensive to buy real estate because interest rates are 5.5% instead of 2.5%. And for that reason, the prices had been corrected, okay? Make no mistake. So what are the results of that? Let's look at another slide here. So the prices have fallen 13% from peak in April 22. So 1.7, we moved the price to 1.5. That's only, and it is a 13% price reduction between the two. However, the funny fact of it is, year over year, we're still 10% up. Year over year, we're still 10% up. Who wouldn't take 10% up in their house? I think a lot of people would. So here's the numbers. If you look at this slide, and you could pause it so I don't talk for too much, and you just review this slide here, year to date, 1.7 went down to 1.5. That's a 13% reduction. We're still, changes from the last year, we're still up 10%. And we still have pretty strong numbers for the east side. Yes, they're down, but they're still relatively strong. And we're gonna come back to this a bit later. But let's have a look in Seattle. Let's go. Friends, when it comes to Seattle, as if you've been watching my videos over the last year, I was kind of making fun of Seattle a little bit, right? Because it wasn't increasing as fast as the east side was, but right now, it ain't decreasing as fast as the east side was, right? And I can't say that the east side is all in chaos. It's not. But Seattle is staying relatively flat because the growth was relatively flat as well. So let's look at inventory. Year to year, 0.6 to 1.2 months of inventory. So not that much. If you don't know what months of inventory means, it means that it will take 1.2 months to sell off all the inventory that there is there, right? So the lower the number, the less the inventory, the faster it sells. The higher the number, the more of the inventory it is. So 1.2 months is really good. We have more, we still don't have enough, right? Median closed sales price is still at $1 million. It's still 12% increase year over year. So it's relatively where it was. It's relatively flat. It didn't increase, it didn't decrease that drastically. If we look percentage of over asking, 54% to 69%. So Seattle is holding on strong, right? Still a lot of a lot of over asking bids out there. Average days in the market, 5 days, 9% median difference from the list price. Seattle numbers are actually really, really strong. And if we look sold to the list price, 88% of houses still sell under 15 days. As I say, make no mistake. And here's where I bring not some kind of, media crazy news. It's all gonna like be destroyed. It's like, hey, look, 88% of houses still sell under 55 days. Yes, we got more inventory, which is great. It's amazing, but we still don't even have plenty. And if you go back to my videos of inventory and interest rates, history of interest rates and inventory, I don't think we're gonna have too much of inventory, but it's definitely increasing so far and it's been great. But it still sell under 15 days. So to summarize on Seattle and make it quick, look at this, not a graph, of this table. So we have May, mil 25, right? And we got June, 1 mil. That's what I mean flat. So the median, like it's been increasing relatively slowly compared to the east side. If you look December, Jan, all the way until the peak of mil 25, and so far it's staying there, right? So nothing too drastic, still 12% year over year, still 54% homes sold over list, and so on. So numbers, we got more inventory. We'll see what that will look like. There are less pending sales. Those numbers are also increasing. So I guess let's just look really quick into Snohomish County and let's make some predictions in the next 6 months and we'll wrap it up. So Snohomish County looks pretty much exactly like Seattle. Yes, way more inventory, 1.5 months comparing to 0.3 at the same time last year. Months to months it was increasing. So if you take year over year, it's such a drastic increase, but last month it was maybe closer to 1 month and now 1.5 months. Median 800K, 12% increase year over year, which is huge, right? So if you look over asking, still 50% of homes sold over asking, above the list price. And median difference from the list price is 5%. So we don't see that 12 to 15% anymore, right? It's a lot more calmer, but it's still average days on market 5 days. As I always say, make no mistake, it's still a seller's market. And we do have Snohomish year to date numbers. As you see, they're relatively flat. Same thing. So in March we came up to 800K. And April 840, May 815, now back to 800. So we're relatively staying flat. That's probably about 12% decrease from the peak, but we're still 12% year over year. The market is up so far. So with that being said, those are the numbers. I know it's a lot to take in. Let's just make a quick prediction, talk about that inflation, and we'll wrap it up with what you can do about it. Friends, there are a lot of economical podcasts out there about inflation and what everything means. I'll just want to touch on something. So CPI numbers come out the other day, inflation 9.1%. We most likely going to have more interest rate increases. Over the last 2 weeks, they went down a bit. So they went all the way up to 6% and then went down to about 5.5%. 5.5% is a normal interest rate. In 2019, we had 5.5% interest rate. Go back to my videos on interest rates, check that out. But 5.5% is okay. You got to remember, we have high inflation, right? There are many reasons for that. The good news is the core inflation actually went down a little bit, but the energy and food sectors inflation, it's still quite up. So what Fed has to do, they increase interest rate to slow down the velocity of money pretty much, because they are talking about the federal interest rate at what banks are borrowing money from each other. So the HELOC rates go up, the car loans go up, credit card interest rates go up, right? At that exact percentage, meaning Fed technically want you to spend less, right? That's what they're doing. They want you to spend less so inflation numbers go down before they can start decreasing those interest rates. That's kind of in a very simple way to put it. But increasing the federal interest rate doesn't necessarily mean the mortgage rate would increase by 0.75%, as they said, the Fed rate would increase. So with that being said, in the next 6 months, we're probably going to see a little higher interest rates. I don't think it'd be 1% higher, maybe 0.5%, maybe they will go back to 6%. That will influence the pricing of real estate by a bit more, right? So far, the fact is we are in declining market. How long it will decline, I don't know, but I don't think, guys, we're not in 2008. You got to remember, even if we have a recession, what happens during the recession? During the recession, interest rates go down, and recessions, like usually housing market, besides 2008, is holding on really strongly against any recessions, and it's hedged against inflations. I already had those slides for you. So, 2008, the system was fragile. The real estate was the cause of recession. But in any other case, it isn't, and it will hold strong. So first, predictions. So a few predictions. One, we're probably gonna have a bit more of interest rate increases for the mortgages, which prices will go down a bit more again. I don't know if it'd be another 10%, 5%. I don't think it'd be anything too dramatic, but the higher the rate, the lower the price. Two, I don't think we will have too much of inventory. We have more, which is awesome. But guys, remember, I just had two sellers that we decided not to sell this year and sell next year. They don't have to sell. There are a ton of renters out there, million renters out there that will rent their properties. And most of them had refinanced, the sellers, they refinanced their houses in the last 2 years when rates were 2.5%, which meaning they have a very low mortgage payments, they cash flow on their houses, they don't have to sell. So they're not gonna be too much inventory. It's not like 2008, people couldn't afford, and brought keys back to their home. They can afford holding on to their real estate. So in the next 6 months, my prediction number 3, there will be a good buying opportunity. And I'll talk about that when I finish up with my closing thoughts. But next 6 months, it's good for buying. It's great for buying. And you gotta remember number 4, good real estate sales. I showed you numbers, 88% sell under 15 days. If it's good, if it's remodeled, if it's the house in a good location, if it's not something dated or scary looking or has bad marketing, it sells, period. You gotta remember that. And with that being said, let's go into the final stage of this market update. Let me wrap up with, if you were the buyer and the seller, what you should do, all right? All right, so if you were the buyer in today's market, and buyers come in and say, hey, if prices are declining, why should I buy now? Well, here's the thing. This is my top reasons why you should consider buying now. 1, you're never gonna time it perfectly. Period. You might time it by kind of an accident, but you're not going to time it on yourself. You don't know where the rates are going, what will happen to markets, and none of that. So just forget about timing it. 1, you have more inventory, as we spoke. You have more options to look at, which is awesome. That's we talked about inventory being miserable numbers for so long. Now the numbers are better. 2 months of inventory in the east side. The last time we saw that was in 2019. It was a while back. So we have a lot more inventory for you to choose from. 2, you have more time to act. You had to rush there and run there and make a decision with the next 24 hours. Now you get a bit more time to think, which is great. Which 3 means you can also work with more contingencies, right? You can do title contingency, you can have inspection contingency now. And all of those things, this is better, right? People don't like when there are 20 offers and being weird when there are 0 offers. Come on, this is the time. If you don't want to buy real estate, this is the time to do it because you have more time to think, more options to choose from, more contingencies to work with, and also you can negotiate some seller credits to pay down your mortgage costs and so on. So long story short, more ways for you to negotiate. So if you're the seller, I don't know why I'm showing 2. If you're the seller, what should you expect? Look, the market had changed. I actually tell my sellers, wait a year, right? I'm pretty sure that in a year, the market will be just as hot as it was. But if you, for some reason, you're moving, you want to sell, you might be making contingent offer, getting a better house. That's one of the reasons why sellers couldn't move, guys. They were prisoners of their homes because they could have sold, but they couldn't have bought, right? So now they have more options to also move into another property and sell their homes. So if you're the seller, you expect reduced demand. You might have 2 to 4 showings a week, all right? Not 50, but 2 to 4. That's the realistic expectations per week. You might have 7+ groups at the open house, okay? So the demand is slower, they are there, but you might have 7+ groups at the open house. If your home does not sell in that 15-day period, 15 to 30 days, as I showed, you will have a 5% price reduction. You must have one, right? We've seen that houses that stay in the market longer, on average, sell 7% less to where they were listed at. And first offer, 4 to 10 days after the price start, you gotta consider that offer. And long story short, if you're the seller, you have to hire professional help. You can't just go to your, cousin John because he practiced real estate 10 days a year. You gotta hire professional help on both sides. So guys, with that being said, this being your trusted professional, Igor Pechkovskyi with Windermere Bellevue Comments. We're here to serve, we're here to work hard and to bring all the real data to you, not some crazy news where, all just emotions. It's for real. We have a temporary price correction, which is great due to a higher interest rate, which we should have anyway over the year and a half, not over the 3 months period, but longer period. But it's gonna be all right. And if you think of real estate, if you need any help, advice, call us. You have our number somewhere there. Thanks so much for being with us this month. See you next month. Bye-bye.